Yeah, we did a little brief introduction. Um, but yeah, just quickly, one sec. So I'm gonna pull up some charts and stuff, and I'm gonna share my screen. So first, I want to go to Martel because okay, last time we talked, you said you were learning a little bit more about calls and puts, and you were. Did you ever put on a trade? You said you were planning on trading. Okay. How did it go? Okay, okay, okay. So you looking at more long term positions? Okay, so what stocks have you traded so far? Okay. Sirius XM. So what has been your pain? Go ahead. Okay. So what has been your pain points so far being in these trades? What are some things that you're noticing going well, going bad? Okay. Okay. So kind of developing that. Okay, so essentially, here's how I describe it. Over time, you're going to develop a playbook of stuff that you like to trade. Um, I will always recommend starting off in in the tech stock area just because they have a lot of volume, like millions and millions and millions of volume of shares traded every day. So it'll be easier to develop a strategy that is based off of like something that you see happen repeatedly, because there's going to be more people that are also looking for that same thing. So first thing I would recommend, like, because I mean, with swing trading, right? There is going to be some of that news picking or like that news analysis, but you can also do a very brief analysis just by looking at the chart itself. And like an example that I mean is, so I'm gonna share my screen real fast. All right, and y'all can see my screen okay, right? So you know what trading view is, right, Martel? You got familiar with this a little bit. Let me see if I can move this. You don't. Okay, okay. So the biggest tip that I will always say is that start looking at the S&P 500. That's going to be like your basis of where the economy is flowing just because it's the top 500 companies summed into one stock. So that's going to give you, and it has stocks from all different sectors like tech, medicine, oil and gas, all this other stuff. That's going to give you a bigger picture of where the market's going in total and overall. And so you always want to start with like a big picture and then kind of work your way down. And this software helps you do that because if I exit this and I click right here, you see all these time frames that are listed on the side. So all these time frames are going to be useful in like telling you what's the big picture story, and then you're going to zoom in, and then you're going to read the sentences of that story. You know, you're going to do your analysis on a smaller time frame to like perfect your entry, if that makes sense. And it gets complicated, you know, because there's different ways you can perfect your entry and stuff like that. But this is the simplest way that you know what I mean, think about it. So usually what I'll do is I'll start on like a weekly chart. And a key thing too before when you're doing your long term analysis, these are the biggest two things in the news that you're going to need to watch out for, like the CPI, employment, and then the interest rate decision. Those are going to be your big three. And the reason that's your big three is because it's tracking where the economy is going on a month to month basis. And on those days where they release that news, that's where the most market volume and volatility happens. And so CPI, unemployment, and the federal interest rate decision. And another one is earnings. You want to look at company earnings too. But we'll talk a little bit about earnings in a little bit when we delve into what companies you're going to trade. So, the easiest way to kind of build this, the simplest way to build a strategy, right, is to you want to catch the market when it's about to catch a lower low or a lower high, if that makes sense. So, what I mean by this is that price will kind of move like this, and I'm a full screen right now. Price is going to go like this, right, over time. Say that one more time. Exactly, exactly. And so you want to be catching it right when those lows are forming like this in the market. And this is usually how I like to think about it to kind of give me a sense of where the market is going when I do see those pullbacks. You know what I mean? Then I'm looking, where is it going to form that low? Now there's a lot of different places on this chart that it can form a low, right? So just for an example, if I drag a line from this high over, right? That's a potential reaction area for investors, right? You just want to be looking for reaction areas. And our job as traders, especially with options, is to catch a quick move. And so that's why combining all of these things, such as how many people are looking at the given stock, what time you're trading, all those things matter because if you get a quick move on an options trade, you'll make significantly more on that option contract than if you were to just, buy at a random time and then hope that it's going to go up eventually. And there are strategies like you're doing that do work where you can, price your contracts a little bit further out. And then once you price those contracts, or once you get an expiration that's a little bit further out, then you just let that move. But you can also perfect your entry, or not perfect your entry because there's no perfect entry, but you can get into a window where it's most optimal to enter to maximize the amount of money that you're making, essentially, right? And so it'll be examples like if there's an opportunity for the stock, to come lower, well, we know that those option contracts are going to be cheaper at lower prices, right? So I want to be looking, whoops, I want to be looking to buy at the lowest I can buy, right? And the lowest that I can buy would be this area right here where, it's closer to that other low that was formed. And you'll see this more clearly on a smaller time frame. But just an example right now, just like we see right here, if I drag a line all the way from over here to over here, you can see, like I said, price runs up, price comes down, and then we see that nice reaction starting to happen right here. Now, exactly, exactly. And that's because, prices got significantly cheaper and then ran up. And now I'm going to give you another tip as to how I find my entries. You always want to be looking at significant highs and lows. So I know that this is a significant low, right? Because it's a significant swing in the market. And I also know that this is a significant low. Now you probably like, why is this candle a significant low? Well, that's because you got to consider that we're on a weekly chart, right? So right now you can't see the details, but if you do, if you just click 1D, that'll just be 1 day. It'll show you more clearly kind of what's going on. So you'll see on that smaller time frame where we see that pattern of prices creating these lows, right? We created this low right here, we ran up, we created this low right here, and then we ran up. Now, a key thing that you want to understand is that everybody is trying to get in at this low, right? So there's going to be a lot of investors interested in this, and that's why you see price run below this and then it starts to come up. This is called a liquidity sweep, for example. And what that is because people like to facilitate a move this big, right? From this bottom to this top, that's $24, right? That's a 5% move over 4 days, right? And to facilitate a move that big, you need a lot of capital. And so it's not everyday people like me and you that are going and facilitating this move. we're a part of this. It's bigger banks and institutions that have millions and millions of dollars because you're battling against hedge funds, people like you and me, the United States, everybody. So you want to be kind of understanding how all of those people are trading in the market and kind of which type of player has a bigger influence. And it's going to be those banks and institutions. And the reason that they have a bigger influence is, like I said, they know people are going to enter as soon as it gets to this gray area. Now, what's so important about this gray area is that if I draw a line just right here, when people bought in right here at this circle and you see price goes up and up and up and up, there are some people that have the philosophy in the market that if price ever comes back down, I'm going to get out of my position when it passes this red line so that I'm not losing more money. It's called like a stop loss. And so the banks and all the institutions know that these are key areas that people put their stop losses. So what they'll do is they'll run it down a little bit. They'll and because you can't create or destroy orders in the market. So to push price higher, you need a seller on the other side that's selling that contract to you so that you can buy it. And this is not necessarily options. This is just when you're trading just pure stocks because these are the people that are actually moving the market. And so they're going to buy below everybody's stop loss because they understand, all right, everybody's looking to enter right here. The people that enter a little too early, you know what I mean? They may get stopped out a little bit, they may get taken out, and their orders get used for that upside move after that. So what I usually like to do in the week, and this is, a couple trades that I took on my story. It was like a 70% trade in it, or it was like one of them was an 80% trade, and I can't remember the other one, but it was off of this quick candle and this quick candle right here because I came into the market, right? I was on my weekly chart. I understood that this was a key level, right? This was a key, and also on the weekly chart, you know what I mean? Each of these candles represents 1 week. And so the if you're reacting at a larger time frame candle, you're going to have more of a reaction than if you're reacting at a small time frame candle, for example. So I didn't just hop on the daily chart and say, okay, people all have their stop losses over here, so that's why I'm going to enter. No, I was like, okay, I'm on a weekly chart. I understand that on a weekly perspective for all those people that are looking for the long term, they're all looking to get out if price breaks this low, right? And then they'll just be, and once they dump their positions, then that will facilitate a bigger move. Now, I think the stock market is about to come down, right? I think everybody that entered in this candle is eventually going to get flushed out because it's that same idea of you need a specific amount of orders to push the price in a specific direction. And so these buys are just getting used as capital to, push price significantly lower. Because the stock market, it's not going to move like this, right? It's not going to go up and then sharply go down and then sharply go up. That's just not realistic, right? I don't think price is just going to keep blasting higher and higher and higher. And there's a few more things as to why I think that. Like I think the Federal Reserve is about to drop interest rates in September, which is a whole nother topic of discussion because the interest rate decision determines like how the economy is operating essentially. And so we see the market super inflated, right? We see the market going up and up and up and up. Well, with talks of, them dropping the interest rates, if they drop the interest rates first, that's telling you that the economy is slowing down because they're trying to make borrowing cheaper. They're trying to prompt people to start borrowing money more. And so this is like raising red flags in my head. And there's other things such as if you look up, inflation data, inflation is slowing down. That means the economy is shrinking. And then if you look at the recent jobs reports that they just put out, the recent job reports said that they added a lot less jobs than expected. Meaning what? Companies are not looking to hire people. They either don't have the money to hire people or they're trying to save money. Now think, why would they be doing either of those two things? Well, that's because they may be getting ready for something big. And another thing, Warren Buffett, he's a really big investor. He's sold like 55% of his Apple. You see the Japanese stock market crashing. We see all these other stuff. And I just dropped a YouTube video on this too. But all of these other things are coming into play. And if they do drop rates, the average investor is thinking buy the dip. And that's why you see this huge candle. And as a trader, you kind of want to be thinking like, what is everybody else doing? And you kind of want to be doing the opposite because you want to be reacting to like what the average retail person is doing versus what the banks are doing. And so just like for example, that idea of where I was like, okay, they're going to push prices a little bit below this and then pump it up a little bit. Well, from a bank's perspective, if I wanted to sell all of my positions, I'm going to want to sell at the highest price so I can maximize my profit. That's just like if I wanted to buy, I would want to buy at the lowest price, right? So they're going to pump this higher so that they can get rid of their things. And all of the people who it's called FOMOing into the market, fear of missing out. All of the people who, saw that, oh, the stock market's going up, is going to keep rallying, 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 their positions are going to get used as liquidity to move the market to the downside. Now, this is just like you don't really want to be more on the speculative side. You know what I mean? You want to be more on the reactive side. I can be completely wrong about this scenario, right? But my job is to say, okay, and here's another key thing that I do is that I mark out the highs and lows of every single week and every single day. So I'm going to say, okay, if we do see price start to push up, right? And then in these coming weeks, you know what I mean? It keeps holding and creating these lows. Well, I'm going to react based off of that. I'm just going to react how what the market is telling me, right? And then that's when I would hop on a smaller time frame and do my analysis like that. And I would say that's why earlier you saw I had that yellow zone kind of put up. Um, that was kind of just my okay. This is my area of interest. I want to see how price reacts when it gets into here, and I want to see if it's going to stall and then keep going, or I want to see if it's just going to completely go down. And so I'm kind of just waiting for those opportunities to arise as time goes on. Um, Another key thing that I like to use is this volume indicator right here. I think this one is a very good indicator because it kind of shows you that concept that it illustrates that concept in real time. There's this concept called support and resistance. So you remember how I drew that zone down here? This would be known as like a support zone because price will come down and bounce off of it, right? And you can see right here these volume bars are kind of showing you that support zone because investors are interested in entering off of this high, off of this low, and off of all these areas, right? And so this I can also send you this the volume indicator is called VRVP right here. And that's why I'm particularly interested in this yellow area right here. Now there's more concepts that I have layered on top of it, right? You just want to build that like you want to build a system of confluences, a system of things that you layer on top that'll make you kind of like it'll back your analysis if that makes sense. And if you're going to be a swing trader, if you're going to be a long term trader, you're going to need to. I would say you're going to have more layers on there, so that way you're not taking devastating losses because the feedback at which is going to take to know if you're right or wrong is way delayed, right? If you enter right here, if price gaps up here and you enter right here in a day, it may take weeks for price to get all the way down here if you think that is going to be put. But the key to that is that's where the money is, right? The money is on the longer moves, right? But you just want to learn how to capture those longer moves, and you do that by starting off on that bigger time frame and then working your way down. Um, so does that kind of make sense? Do you have any questions off of that? So, I'm not too sure I'm pretty sure that's just the type of order that was placed. Uh, So I'm not sure which one is buys and sells, but it's related to which one. And then I can also jump into here. So yeah, we see up volume and then we see down volume. Let me see if I change this with it. Yeah. So these are just like how many buys were placed and then how many sells were placed in the market. And so we see right here, there's a lot of down volume right? Or I mean, I would probably say there's more up volume down here, but that makes sense, right? Because people are trying to buy lower. And there will be more sell volume up here because that's where we've seen that sell off. And as price comes up here, if we can't break past that wall of sells, then we're going to expect price to get pushed down further. And the key to understanding this also is because there's another thing that banks trade with, or not banks, but just there's another entity in the market. They're computers that trade every single day. And so there are automatic price points all on this chart that will get filled automatically. So those computers, because they make very, very calculated decisions on how to make money. You know, people put time and hours into these machine learning models and just these trading algorithms to take people's money essentially. And so that's why even with the crash scenario, I understand that if it does get up here and there's enough fear in the market because fear drives the market faster than greed or the opportunity to buy in the long term does. People are going to start selling off, and the more people that sell off, the more of those algos are going to get triggered, and the more algos get triggered, and it's just a higher effect. Now I can't tell you once again how far price is going to go down, and that's why it's good to do things like you can set a target on this low, for example, if you do enter a position where you were to enter up here when price gets all the way up here. And that's kind of my plan right now is to see price how price reacts up here. If I drop down on smaller time frames and I see something that I like, then I'm going to try to get as close as possible to this target as I can. Here's another key tip that I like to do, and this would be very useful for you, Martel, because you like trading long term. Let's say you bought multiple contracts up here, right? Let's say you bought like 5 contracts. What you would do is as price goes down, you would sell each of those contracts, right? So if you bought up here and price is going down, let's say when it gets maybe right here, you would sell. And then as it gets lower, you would sell another one. And as it gets lower, you would sell another one. And you would get to a point where you would have sold 80% of your position so that way, if you are in a trade and you have 20% left and you do want to really squeeze that trade and get this target, you have that 20% left where you can let it run to this target and that'll kind of be your trade. And even if it goes against you, right, even if you were wrong, when price starts to come all the way up here, well, you've already made 80% of the profits on that trade. You're just going to be losing that small little chunk and you're still going to be in profit overall. So that's a very good tip and then you're gonna also want to. There's a thing called averaging into the market, right? So you don't if you see price get up here, right? You don't just want to buy at once. You want to ease into your trade so that you're not feeling that pain of holding it if you enter too early. Because if I enter all the way down here, let's say I enter a put all the way down here, right? Or let's say I enter 10 puts all the way down here, and I have to hold all the throughout that time to see what if price potentially goes up there and then comes all the way back down. I have to hold through that whole upside and that whole loss, and feel that pain of like, dang, my position is going against me. But if I know, buy one right here, buy one right here, buy one right here, buy one right here, or you can delay it as much as you want to, depending on like your risk tolerance. But that'll kind of minimize your risk for you as you ease into that trade. And then it'll be the opposite. You want to kind of ease out of that trade and that'll be a way to like optimize your efficiency while you're trading, if that makes sense. Yeah. Yeah, go ahead. Yeah, and you could set. There's what he was talking about with the paper trading, where it'll allow you to simulate your trades. But that's a very good point because you don't have to go in and throw money in right away, and it's better. And you can also kind of do something similar on Robinhood where you just add it to your watch list when you would enter and simulate your returns that way. So that way, you know what I mean? You're getting that feedback. Like he said, trading is really more of the it's not so much more of the speculation than it is the actual discipline. Like you don't want to be a if you are emotionally attached to a trade, that probably means that you either have too much money in that trade or you're just too attached to it because of your expectations. Like you want to have the mindset every dollar you add to your trading account and every time you put on a trade, all that money can be gone. Right? All that money can be zero. This is more of just like a fun side hustle to where you can add your money in, right? And then you can actively grow it yourself as something that you like to do. And that's primarily why I like to trade. Because some of those times, Martel, like for example, remember when I had made that 5K on that one trade? After that, man, I felt on top of the world. I was like, "Yep, I got this in the bag." And then the next few weeks, I had took out a pretty good chunk of it, but the next few weeks, because I felt like I was all on top of the world and I was too attached to the money, then slowly but surely, I lost just that last chunk of it. And so that's why, like, trading really is because there's even time, like the guy Alex in here, there's been times where I've had to, like I taught him how to trade and I had to reach out to him and be like, bro, I'm tweaking. Like straight up, I'm just I'm just not trading good. But that's simply because like I was too attached and too in my head. How you deal with money in the real life and how you deal with all this other things in real life is gonna really impact how you trade. But you know what I mean? Like I think you'll be completely fine because it's like you're a very disciplined person already and you have good habits. And so it'll be easier for you to kind of like not attach to the money even if you start off with smaller amounts. So that way you can kind of get the feel for like, okay, even if you do want to trade like other stocks to get a feel for it, you still can ease into it rather than, jumping all in and then losing all that. Um you said you were in Sirius XM. Okay. So here's another tip. Okay, because usually, and this is just me, this could change for you in the future. But usually, if a stock is at $3, $4, $5, I usually don't touch it at all. And yeah, if you look at my watch list, if you look at my big watch list, you will notice all of these stocks. Let me see if it has a price. Well, I'm just gonna click through them. Nvidia, for example. We see Nvidia is worth $100 right now. Tesla is worth $200 right now. Mara is worth 17. This is probably the lowest I'd probably go. Apple is worth 216, IWM 206, and you get the point. All of these are in the range of like 80 to like $300 ish. That's like kind of the stocks that I like to look at. And that's because you'll have more volume on those stocks. It'll be easier to get in and out of your trades and they're more predictable. With those stocks like SiriusXM, that's when it's going to take a lot more capital to see those bigger moves that you're expecting. Because it could take weeks for that trade to pop off, depending on like what their stock is doing. Like I'm not too sure what their stock is doing, but I do know that a lot of people are actively coming into the market and looking to invest in stocks like all these big tech stocks. All of these stocks are mostly in the S&P 500, all of them. And I have a couple small ETFs like this one, IWM. I just think this is a good ETF because it's one of the smaller ones, right? SPY is an ETF that's worth like, let me go back to it. SPY is worth $500 right now. And another reason that I do this is because the price of the options changes with the stock price. So a lot of the times when you are trading stocks like IWM, for example, where the stock price is 206, you'll see that those options are listed cheaper than maybe SPY that's listed at $532. And so when I have my smaller accounts that I'm working with, I'll usually stick to things like SPY, and then I'll work my way up to like, or I'll stick with IWM with a smaller account, and I'll work my way up to like SPY and QQQ and things like that as I get more capital to trade those bigger stocks um, on bigger time frames. Okay, okay, yep, yep, exactly, exactly. That's exactly right. It's all based off of psychology, and all of these psychological things repeat, just like the market has to correct itself, just like how it has to go back up eventually. It's all just a cycle, and so all of these things are just things that we've seen repeat kind of over and over and over. And another key thing is that when you get when you get down towards these lows, the fresher or the sooner you get towards those, the more riskier it is, but the more likely that that's when all of those algos and all of those things are going to kick in, and that's where you're going to see those bigger moves in price, just simply because everybody is looking at a fresh new area to hop into the market. And you don't want to be getting into a stock when it just gets to the news. You want to be getting into a stock right before the news, because then the news will be a catalyst for more people to keep pushing it whichever direction that is going to go. And with building off of this, I'm sorry, I'm just yapping right now, but building off of the like the small account information, yeah, for you, Martel, it's going to be better. You're going to grow that account quicker if you are trading all of these higher volume stocks. Because, like with SiriusXM and all those other things, you aren't going to see those moves every single day. Like, you aren't going to see those opportunities. And that's a reason why I have so many stocks on here, is because there are specific setups that I look for, and if I don't see it on NVIDIA, I'll go look at Tesla. If I don't see it on Tesla, I'll go look at MAR. If I don't see it on MAR, and I'll keep going down the list until I see something that I like. And if I don't see anything at all, I just walk away. But that was the biggest thing for me to learn, was that I don't have to trade every day. Even though I have all of these stocks on my watches, that's not a guarantee that I'm going to get a trade. This is more of just increasing the likelihood that I'm going to see something that I like. And it's really just trying to like figure out what you like and what you don't like. That's really what trading is. And once you find what you like, you just keep doing that over and over and over and over and over. And whatever does not work, you stop doing that. The quicker you do that, the more money you will make in the future. And you want to focus on those consistent wins. You don't want to be, yeah, it's good for me to come on here and say, yeah, I think SPY is about to crash because of the economy and all this other stuff. But it's better to take those base hits, base hits, base hits. And then maybe when I do put the same amount of money in during that time where the market is about to come down or have a huge move, I would have made a lot more on that same amount of capital, and it would have boosted my account even further. But the issue that I had was when my account would grow bigger, my trade size would go bigger. But if you just keep it consistent, keep it the same, and you do the same thing, it'll be the small growth that will act as the fuel for the future growth in your account. And so maybe when you get to a point of real consistency, that's when you can scale up your trades. And my cat just fell off the desk. But that's when you can scale up your trades and kind of get bigger and bigger and bigger. Um, yep, yep. Well, just honestly just focus on how big these are in general. Because this is going to tell you the net volume. Like usually when I use volume indicators, I'll usually make it one color just because I'm interested in only seeing like I just care about how many trades are being placed. I don't really want to focus too much on what kind of if it's a buy or sell because sometimes that gets me confused of like, okay, should I be buying right now or should I be selling right now? So I just look at net volume and then I look for specific reaction areas like for example, full screen my screen. Looking at this black candle right here, you will see it tips nicely into that black candle and that's where you see that reaction. Well, I have screenshots and I'm going to show you these. Just a second. And I'm not going to really jump into the theory, but I have screenshots that show me, okay, let's say if I'm looking to enter calls, right? And I'm thinking that the stock goes up, I usually look for a price to go up past a high, and I'm just looking for it to come down, form that low, and I'm getting in on a nice quick reaction. And if you see this black candle right here, you see this gray area is so small, but that's just because I zoomed in even further and I made that black. I looked for the smallest black candle on the smallest time frame, and then you see that nice quick reaction like that. And another thing, right? I see, okay, price runs past these highs, it plays around a little bit, and then I'm looking for it to come down here into this area, right? Look at this candle right here. The wick is it's kind of a more balanced candle, right? It has a long wick on the top and bottom. And the wicks just tell you where price previously was, right? So you know if there are long wicks on the top and bottom, that means there's indecision in that candle. And because there's indecision in that candle, maybe there's going to be a decision that'll be made in the future. So when price taps into that candle, which example was I just saw in this one, you see a nice quick move, right? Go to the upside. And these trades are very quick. These are like, it gapped up overnight and then this is a 5 minute time frame. So this is 5, 10, 15, 20 minutes. But price went up, almost $3 on this specific stock in 20 minutes. And so that's where it comes into play with the options of like, that's how you make a lot of money. You want to capitalize off of those quicker moves. And even if I go back to SPY, I guarantee you, you're gonna see, it's those same principles, right? These are just things that we see work all the time. I'm gonna, I'm gonna get rid of because I really don't even use that volume indicator. That's more of just to show you the concepts. But right, if I look at this green candle right here, right, you see price very swell taps into that, and you see that nice move to the upside off of this. This is called a demand zone. And you even see this right here, this bigger black candle. So you see how this green candle is used to refine my entry, right? And so if I'm on a weekly chart, I can look for these. They're called order blocks. I look for these order blocks. Let's say I drop down to a daily time frame, for example, and look, I see this indecision candle right here. Okay, there's a very that even it's narrowing my range down even further. And I also know, okay, price took out this major low in the market, right? That's narrowing down my entry point even more. And so another tool that I like to use is so this tool kind of maps out your trade, right? The very bottom of this gray box would kind of be the area where you would get out of the trade if it goes bad. And then this black line would be the entry. So what I usually do is I'll put the black line at the top of a box. I'll put the bottom of that box just at the bottom of a zone like this, right? And then I'll say, okay, once price enters, if price comes down here, I'm going to get out of my call position. But as long as price continues to go higher and higher and higher, I'm gonna stay in it. And that's easier said than done though, because I posted on my story as well where I tried to swing a trade because I wanted to catch this whole move. But I want you to look at how big this black candle is right here. That will burn your contract significantly because it's going against your trade. If you don't buy your expiration out far enough, it'll decrease the value of your trade significantly. But if you're buying, if it's on a Monday and you enter right here and it expires Friday, that's not going to have nearly as an impact as if you would have bought a trade on Wednesday and expired on Friday. That's what I did, and that's why. Or no, I think I bought it on Wednesday and it expired on Thursday or something like that. It was a very quick expiration, but it went against me a lot, and so that decreased the value of my contract significantly. But like I said, if I buy 2 weeks out, 3 weeks out, I'm gonna catch the profits from this whole move. And that's a way, even from a long term perspective, because that this took, let's see how long this took. This took 4 days, right? So you understand that there's an order block right here. You understand this low got taken out. You see that setup that I just showed you, where it just comes to that zone and continues. You would have bought it on, like, let's say, what day would this have been? I can't see, a Monday, and you would have sold it on maybe Friday, and that'd be a good way, to just not have to even worry about it, not have to think about it. And you can also do a thing where you set alerts. If I right click and then I hit add alert and I hit create, as price is going up, if price ever comes back down, it'll alert me. So that way throughout the week, my phone will just buzz and then I'll be like, oh shoot, it's at my thing. I'm going to accept my loss. If you buy your contract out for enough expiration, you will be at break even on that contract. You won't be down significantly. But if you're doing good trading practices where, let's say, you bought multiple down here and you're selling as you go, well, that won't even matter. And then that gives you opportunity, because if price does keep running up here, right? If it does keep going higher into that high volume area that we were talking about earlier, you can even maximize more. And then once you see signs of weakness and you see signs that price is kind of failing to go higher, that's when you switch your analysis as a trader and you find the next trend. And that's kind of a way. And it's also the same thing on the downside. The reason that I'm looking at that area is because I also have it on the downside, right? You see price take out a low. I'm expecting it to come back up to some type of zone and then continue. And you see right here, right? We see price come up and then we see it come down and continue. Another example of a trade to the downside, right? We see a gap down. I'm expecting it to come up and then come back down. Like we see, it comes up, comes back down. So this is the exact same thing that I'm looking for on a bigger time frame. And I'm gonna delete all of this because it's kind of craziness. But if I go on that weekly chart and now I understand that, okay, this major low got taken out, now price could potentially be running up here. All of these highs up here is going to serve as that red zone that I just showed you earlier, right? That's going to be my zone to buy puts, because this is what I see repeatedly happen over and over and over in just the amount of trades that I've taken and just the setups that I've seen over time. And this is a great way to, gauge what the market is doing. Take screenshots of every single one of your trades, because the more feedback you have, the better. So that way you're not just swinging and then never learning from your mistakes. That's the biggest thing that'll just kill your accounts, is if you're just, swinging the gun. But that was a lot of information. That was a lot of content. Any questions or, anything that I could clear up? Okay. Okay. Yep. Yep. I don't ever do any of the, like, buy a call to hedge a put or buy a put to hedge a call or butterfly. I don't do any of that. I just straight up buy low, sell high. I just keep kind of trying to follow that principle while also paying attention to the major economic news and then seeing where do I think the market is going to go based off of that. Yeah. Exactly. Exactly. Hmm. Yep. And that's why, with the Sirius XM or that other trade, you don't want to just go swinging a gun. You want to like have a system of stocks that you look at consistently because you'll learn the personality of those stocks and you'll be able to make decisions based off of that. Yeah. 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 Exactly. The simpler you keep it, the better. Right? If you learn because what all of these are, it's just supply and demand zones. That's just a strategy that I looked up and I've kind of tweaked it a little bit to my liking. But this is what I looked up when I first started trading. I looked up the economic principle and then I started looking up how do I draw supply and demand zones in the market. And then it got me to realize, even key things like this, you see this low right here. That's what we talked about earlier, where we see that liquidity sweep because people have their stop losses here in that continuation. And it looks different in every single scenario, right? It's not going to look exactly the same, but all I'm expecting is that higher low to be created in each one of these scenarios. In times where you see these gaps in the market, that just means price is moving overnight. And so goes to even show it more that you can hold your trades for days. You know what I mean? You don't have to the reason that I do it just this quick scout from I look for my entry from 8:30 a.m. to 9 a.m. And the reason that I do this is because I don't have to look at the chart all day during my job. For me, it's a lot of stress. Even if I do put on a trade and I'm worrying about it, if I do swing it, I'm gonna be checking that trade a lot. So that's why I try to just have my trades be quicker. I'm in and out. I can go about the rest of my day, work, and come back tomorrow. And you know what I'm saying? Take those base hits every single day, just because that's what I've seen work for me. And even like Alex said, where it's been times where we have grown those accounts. Um, I've been able to grow $50 to like 2,000 or something. This account actually had at the peak it hit $4,800, but then I had lost, bro. I got so greedy and I had lost so much of it. But this is a 5,000% return. So right now, I was doing this with $50, but if I take this same approach, and this took from September 14th to January 3rd. So if I take that systematic approach to take those base hits, you see how your account can compound significantly. So now if I start with $1,000 in an account, $2,000 in an account, and I still understand I'm in the market, I'm not going to change anything. I'm in the market every single day for 30 minutes to an hour, get out, take my nice 20, 30%. Sometimes it could be 80, 100%, depending on how fast the trade moves or how much. I'm just going to do that over time just so I can get just to get that account growth going and, stimulate that for the future. Let me see if there's anything else in here. Yeah, yes, sir. My YouTube channel is BM Trading right here. B.M.Trading. I have a few videos on here. This video breaks down basically what I was kind of just talking about with the economy, how I think is about to crash, because I really think everything's going to come down. But if you're looking to learn, I would probably say my most valuable videos definitely it's how to read stock charts 2024. That kind of breaks down what I talked about a little bit. It's when to buy calls. And I got to make some more of these videos where I kind of show me live trading usually when I try to make these videos, it always goes freaking wrong. So, but I'll try to post more of these so you can get a more in feel, or you can get more of a feel of how to set up your own trades and kind of do that stuff. The more content you consume, the better with stocks. It's like I'm continuously learning. So just, as soon as you decide to commit, just continuously learn, learn, learn. And you'll get better quickly. Trust me. Yep. Hmm. Yeah. Okay. Yep. Hmm. And that's where option comes into play because it allows you to take smaller amounts of money and then have that opportunity to get access to those kind of gain, but you increase your risk a little bit. So that's why it's always better to put less money in rather than more money in when you're trading options. And then I'm also gonna, yeah, go ahead, go ahead. Okay. Okay. Yep. Yep. Mhm. Yep. Yep. This is the website that I use to see the stock prices. And yep. 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 So, and I'm also gonna post this video on YouTube so you guys can rewatch this kind of and see. But the biggest key takeaways that I want you guys to take from this video is just keep it super simple. You know what I mean? This is a general movement of the market. This is gonna change. It's gonna look different. But once the market does this, we're just looking to capitalize off of those lows. And when the sentiment changes, when you see price start moving flat, and then we start seeing the opposite, right? We're going to capitalize off of all of these highs that are formed. And that's simply going to be the strategy over and over and over. And you're just going to do this over and over and over pretty much. So just learn the flows of the market. General flows, one more thing, price will, and it's easier to illustrate this on a daily chart. Price will need to consolidate before it actually starts to move somewhere. So what I mean by this is if you look how long in this time that price stayed relatively flat, that was 18 days. So this just goes to show, even if you are getting in at that low, it is not always optimal to enter, right? That's why you want to kind of be understanding these little tips and tricks. Like, okay, if we take out a low, that's when a bigger reaction is going to happen. Or, you know what I mean? Um, because, like I said, price will, a lot of the times, it needs to build up. You need all that capital. And that's like Martell, that's what SMB is doing right here. They're building up all that capital. They're exchanging all of those orders. People are getting flushed out to push the market this high. And then the same thing happens where you need to start building up, right? You need to start building up those cells. You can't just dump all your cells at once. And so that way, it moves like that. And once again, this move is not guaranteed, but this is just kind of my where I think the market is going. But even as a day trader perspective, I could even jump down and I'm putting all of these candles into ranges, right? I'm saying, okay, this is where price closed on the previous Friday, right? On the previous day on Friday. Then I maybe drop down to an hourly. And what am I going to look for? I'm just going to look for those same setups where, it's an order block. I have the opportunity to enter like this. And then maybe I can enter into these higher price targets, into the other areas where my other strategy tells me that there's going to be a reaction right there, right? Because we know exactly, exactly. Like that other strategy said, okay, we see price dump below a low, return to that area where it dumped below that low. And then if we see it start, reacting and building up, or, doing something like this, then we're looking to take puts on the downside. We're flipping our sentiment. Stop loss comes here, and you set up your trade. Whoops. You set up your trade something like this. And you know what I mean? The targets and stuff aren't going to be this far, right? These green areas are not going to be this big. With the $100 account, you can do this right here because this is a what $3 move, and depending on your expiration, you could turn that $100 to $300. If you're being more conservative, you may get like a 25 to 50% return. So you can make 25 to $50 on just a move like this. And if you're doing that every single day, right? You're coming in, you're taking 25, 25, 25, 25. And then you get to a point where you're doing that so consistently where you're like, all right, I want to put 200 in per trade. You scale that up to 50 a day, 50 a day, 50 a day. Scale that up 100 a day, 100 a day, 100 a day. It doesn't have to be these massive, okay, I want to catch $1,000 in this one move and $1,000 when the market crashes, then 1,000 when it comes back up. Just take those base hits, build that capital. When you still, like I said, when you still do have that small amount, and during no time, if the market gets up here and does crash, that 200 could turn to 1,000, and now you've just facilitated your account growth even further. So start off small, and like with Lim in your situation, it sounds like you're putting a lot more size than you need to, and you just need to choose a like. This is how I would choose how much money you're going to put in. If you put that money into a trade and then you're comfortable with losing every single dollar that you put into that trade, then that's how you like if you could close your phone for days and you could still pay for rent, groceries, eat, all that stuff and not have to worry about it, that's a good base level to start at while you're learning so that you're not just, you working your hard earned cash and your hard earned money, lots of it, to try to learn how to trade because you're gonna have to pay to learn if you don't know what you're doing. That's just how it is. But yeah. And then so that's pretty much that's kind of how these meetings go. I kind of just, talk and say random stuff. And I'm more than happy to do more of these meetings like on and on in the future, just because, like I said, the more you learn, the better it is. And we can just reflect on trades that I've taken, um, trades that y'all have taken, and then just get better and better and better as we go. And yeah, that's pretty much it. Exactly. Exactly. And then I'm gonna also send both of y'all a link to this so that y'all can, see these example trades. This has everything. This has all of it from back in the day of me just learning, right? This has just trades on trades on trades. I don't know if this channel has it exactly. I may not have the channel anymore where it's alive, but there's just a lot of examples in here. There's a lot of information in here, honestly, just of how I've made it. And then I can also kind of point y'all through which is better, what information I think is better or not. But that'll give you a good base level on a super simple strategy, right? Because Alex, in your case, um, you want to just talk to them about like when I started teaching you, kind of how that process went, or because I feel like Alex has been trading for a year, and he's to a point he's making $100, $200 a day, like every day, consistently. And like I said, he's done the things where it's 50 to 2,000, 50 to 100 and stuff like that. So yeah, I'll leave it up to you, Alex, to kind of talk about that. Yes, sir. And Martel, even when I come to Iowa City, we can do in-person meetups too, because Alex is down there. Um, so we can all meet up down there, talk trading. Of that we would do that a lot of the times in school. We would just meet up at Java or kind of just like meet up at the engineering building and stuff like that, and kind of just talk about um, just talk trading for real. Yes, sir. Yes, sir. But yeah, so go ahead. For real. Like, bro, if you finna enter a trade and you like, man, I don't know if I should enter this swing, hit us up and we'll tell you what we think for sure. Just because I think it's good to get that input in different perspectives as you're learning. So that way you like, okay, I see this pattern start to work. And then you focus on that one pattern and you get good at that. And then you see something else start to work and you get good at that. And you just improve, improve, improve. Yes, sir. Yeah, go ahead. Uh-huh. So yeah, you can build your strategy in there. Some people set it up to make their own auto trading bots. Some people set it up to make indicators. That's how all these indicators are made. Um, all these indicators are basically made from people like if I look up volume, for example, you're gonna see a lot of different ones, and then you're gonna see like these are regular people that make their own volume indicators, and that's why I usually try to step back from indicators because some of them, you don't even know if you don't know what kind of work they put behind it. And I've kind of just learned how to do my analysis just purely off these candles, just purely off these candles and these screenshots. That literally has been my bread and butter, straight up. Yeah, Okay. You can set that up in your trading app. Yeah. So it's also going to depend on your trading app because some will let you, I don't know which one specifically will let you set the exact price you want to sell at, but there are some that'll let you set like a limit order to where it's like once my contract, let's say I buy a contract for $100. I'm gonna I'm gonna have an automatic order to fill when it gets to $125 the worth, and I don't even have to look at it all day. And Alex can talk a little bit more on that because that's his specialty, more of just like limit orders and kind of like being very precise about like, all right, that's like very disciplined about your entries and your exits. It's like, all right, I'm gonna wait till that thing gets to 125. But if my order goes from $100 to $95 automatically fill. So I'm only down $5 versus 25, and that's your way to manage your risk like that. Yeah. And Robinhood is a whole nother story. Yeah, you just got to get familiar with using TradingView and Robinhood. The better you get at using those two, the more your trading bag will develop because there's a lot of nifty tricks that you can learn. Behind you, watch out. But yeah, any more questions, man? I know we dumped a lot of info. Like I said, this video is gonna be up, so you rewatch this video if you need to as well. But yeah, any last minute questions, thoughts, comments? Yep, 100%, 100%. And we can start like a group chat, anything. Yeah, yep, that'll be good. Because I think actually, Martell, you could just text me Lim's number and then I can make a group chat with all of us. Because I'm pretty sure I have everybody's number. And then just drop y'all name in there. And that could be a way for all of us to drop trades, communicate, and kind of show y'all what we working with throughout the week. Okay, bet. And then I can add Alex to it. Once that's me. Like I said, man, there's a lot that comes behind it, but keep it super simple. It's simplest as I can keep it right now, but I'm telling you, and if we do this consistently for about honestly for 2 weeks, if we do two more meetings, you'll be like, oh, especially if we start walking through trades and breaking it down, you'll start to see how all of it really starts to click together. Yep, yep, yeah. So next follow up would be when is our next meeting? I mean, I would probably say not after market close this weekend, but I can meet Saturday, around the same time. I can meet Sunday. I can meet Friday after about like 4 or 5. Really, just whenever y'all want to. But I do recommend us doing this consistently. Just I think it'll help y'all growth like a lot. Okay, good. Is there a time on Sunday that works best? Okay. We could shoot for how does this upcoming Sunday at like 3? How does that sound? All right, bet. And if we need to move it around or anything, we can also do that. So just kind of, if you have questions that you are finding out through the week, just write them down and then we'll bring those two and then me and Alex will just straight up break down trades that we taken through the week and kind of see what we were thinking and our thought processes on stuff and we just keep doing this for 2 or 3 more times and I bet y'all be pretty independent after, a few more weeks of this. But yeah, man, I ain't got nothing else. I appreciate y'all coming in coming to this Zoom and hearing me just speak my mind about trading. But that's all I have. If y'all don't have anything else, and I hope y'all have a great rest of y'all day, man. Yes, sir. Yeah, no problem. No problem. All right, man. I'm gonna hop off. Y'all have a good day. I'll catch y'all later.